Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Thursday. I hope it finds you well. It's the big day. Yeah, it's debate day Thursday. We had a bevy of economic news. You know where we stand on this. It doesn't matter. I know there's people out there, and probably on this show, more conservative than liberal for sure. Donald Trump can't save it. I know that's going to get you upset. It's going to get you angry. It's going to get you fired up. But this problem started way before Donald Trump was even born. And this problem started back in, 1913 officially, but it really started before then. The bankers had been scheming, really since they got thrown out by Andrew Jackson. That's what we're up against. And so I just want you to understand that. I want you to prepare for that. Okay? Because it really doesn't matter. Okay? It doesn't. I wish it did. How great would that be if it did? But it doesn't. The pendulum has swung, and now we're going to face the repercussions of it. That's just how it's going to be. Now the question is, what are you going to do about it? That's really it. That's the only question that remains. 800-951-0592. That is our toll-free number. You know what we do. And you know you need to do it. The funny part is, everybody I talk to now, the second they find out I'm in gold, I'm in silver, they all want to talk to me. Everybody does. What do you think? How does it work? Should I buy it? And the answer, and here's the funny part, they already know the answer. Yes. Get ready. You know what's coming. You understand. We all understand. This is what they created. We didn't create it. This is what the central bank created, and let's face it now. We have a government that essentially decides that, hey, you know what? We need to help everybody. That's not how America was supposed to work. It's supposed to help yourself. Right? The last thing you wanted was a handout from the government. Now we're just stupid. Right? $2 trillion, $3 trillion, $4 trillion budget deficits. I mean, come on. Pull your head out of your backside and understand what's coming. Are you going to prepare or are you not? allamericangold.com is the website, and we had a ton of data hit today. Remember, we told you, wait for Thursday and Friday. Monday didn't matter. Tuesday didn't matter. Wednesday didn't matter. I begged you yesterday. Better buy it. Yeah, gold's up 30, and it's not done. And it's not done. Because guess what? We get the inflation number tomorrow. But when it comes to, let's just start with the good, the best number. Jobless claims, 233,000. Yep. The third straight week over 230, which was really kind of in line. They're thinking 235. We'll see what the revision comes in. But continuing claims. Now, we're getting there. We're getting close now. In other words, this last rounds of layoffs. So let's just take like the last month of layoffs. All of a sudden, people aren't finding work. I got laid off. And I haven't found another job yet. Well, watch it. It's in the, I wouldn't call it in the danger zone yet, but continuing claims definitely in the warning zone. And then today, man, you name it, across the board. Walgreens, horrible day, came out and said, man, the consumer has stopped. Levi Strauss, down 15%. H&M down 15%. Jason, this is something where we saw it in the restaurants, right? We've been seeing it, right? Yesterday we talked about, Hooters. Hey, we're just going to close another 40 stores, right? Red Lobster's bankrupted, and the list goes on and on. Olive Garden, we got to raise prices again because guess what? The consumer isn't coming enough, so we got to raise our price to make our money. Now it's spreading, right? What was it? One of that mall retailer, Forever 21. Hey, we need 50% discounts on rent to stay open. But Walgreens today, Levi Strauss today, H&M today, a lot of consumers related stocks now saying, hey, something has changed. We were in this gradual slowdown, but it looks like, Jason, it's another big leg down in the consumer discretionary area.
Yeah, I've been noticing a slowdown in spending with the people that I come into contact with. It seems like there's a lot of people that are getting a lot more conservative with their spending and being very specific on where that money is going to go and where it's not going to go. So I've been watching. Joe, I think that's been going on for a couple of years. It's just that there's just a lot. That was just a lot of money sloshing around, wasn't there, Joe? How much money was sloshing around? It was a ton of money. And we expect the spending to stop sooner. We expect these things to halt sooner, but we're seeing it now, aren't we?
Yeah, Walgreens down 20% on their earnings numbers today. You better buckle it up. Hey, tell you what, strap on that seatbelt, leave the driving to Jason and I. We're going to be right back. 800-951-0592. A quick look in here at the markets. I think we're going to get a very different looking market by the end of the day. But right now, the Dow is up 50, but I don't think it's going to stay there. I think it's going to be a rough day here, but we'll see. The S&P's already turned negative because the Dow was up almost a couple hundred points, and it's almost like, okay, hurry up. Everyone get out so you can go down. I think the NASDAQ right now up 20 points. The 10-year note pretty flat here, 429. It was high as 432. Remember, because all the craziness that was going on in Japan, and it looks like now in France, the extreme right looks like they're going to win on Sunday. And then the extreme left, and who knows if they're extreme, but this is, mainstream media, right? The extreme left is going to finish second, and everybody wants to win. Who's everybody? I don't know. Macron and all his buddies, they're going to come in third. So it's not looking good there. We got to keep an eye on that. Crude oil up 83 cents. Of course it is. Almost $82. Gold, don't worry. It's only up 31, 32 bucks right now. 23.40. I'm going to tell you this. Should have bought yesterday. You need to buy today. Because I've got a pretty good idea of what I think inflation's going to look like tomorrow. And then everybody's going to be focusing in. I think tonight is probably going to be, one of those crap shows, right? You can just feel it, right? And nobody's going to be happy. And then on top of that, the French election, and we talked about the Japanese yen. Listen to this. The yen, it's almost still at 161, and that's not good. With the bad news today, I thought maybe it would get below it hasn't yet. Just get ready. We've been telling you and telling you and telling you and telling you. Listen, it's insanity. Right? Banging your head against the wall and expecting a different result. If you want a different result, you need to do something about it. Just telling you. The bubble's getting ready. There's no soft landing. I know everybody wants one. It's not how it works. What, am I a genius? No, you know what? I know. Yes. I'm making it up because I want to scare you. That's what I'm doing. No. No. Go back and look yourself. The Fed has never done it. It's never happened. Matter of fact, the last time they whacked the money supply like they're doing it today, you know what it was called? It was called the Great Depression. That's what it was called. Sorry. That's what happens when you build a house of cards on debt. That's why I keep telling you, please get diversified here the best that you can. Obviously, if you don't hold it, you don't own it. That's a fact. That's why gold and silver is so important. But I'm imploring you, if you've got $50,000 or more, check out our friends at Y-Refi. I'm just saying, check them out. Why? Because you get great rates of return. I'm going to tell you right now, 10.25% return for the next 5 years. I don't think you're going to get that any year in Wall Street. Could be, maybe a year after it falls 40%, maybe you get a 10. It's not correlated to the stock market. You can use it as you turn your income on, you can turn it off, you can compound it. They don't charge fees. I mean, they don't play any games. That's what I love about it, because they don't play any games. And they've got a great program. That's why you need to call and check it. Have them tell you about it themselves. InvestYRefi.com. You know the website. Just call them. 888-YRefi24. Now, having said all that, oh, by the way, too, Micron Technology, they're the one of the computer techie people. For those of you here in Arizona, right, I think they're part of the big chip building, what have you, monstrosity there on 17 and the 303. Not so good. Whoopsie. Because their name's not NVIDIA, apparently, right? Because, we only have a handful of stocks out there. Now, earlier this week, we told you about these living wills, right? And this is for what they deemed to be the failed banks, and how J.P. Morgan, B of A, Goldman Sachs, and Citigroup, and by the way, Citigroup was the worst, but they all failed. Like, that's not going to work if we want it down. Yesterday, I guess I don't know if it was after the bell, before the bell, sometime it came out. The stress test results came out. Now, here's what's interesting, and this should tell you a lot. So they claim to have, like 4,400 banks. Really, we got about 4,000 banks, but they call a bunch of things banks that aren't banks, just so they can get bailed out and stuff, like Charles Schwab and Goldman Sachs, right? They call them banks. So they got about 4,400 of them. And I always wondered, hey, when this thing is over, how many banks are going to be left? Right? And there's always, there's this debate. Well, the stress test, guess how many banks of the 4,400 banks, guess how many banks they test? 31. 31 banks. That should tell you, as far as the Federal Reserve is concerned, there's only 31 banks that matter. You know what's so funny? Silicon Valley Bank wouldn't have even, I don't know, well, I guess they would have. They should have been in the stress test, because at the time they were, they were cratering. They were like the 16th largest bank, 17th largest, something like that. Tells you what it's worth. So they said everybody passed. Hey, all right. Yeah. Woo! Yeah, baby. Well, everyone got a D-minus. No, they don't even, they just give you, it's a pass or fail. Well, you know what was really interesting this morning is Jamie Dimon went out and issued a press release right before midnight last night in response to the Fed's findings. And they said that the Fed projections and other issues there said that the results from the stress test losses, that the Federal Reserve underestimated the losses at J.P. Morgan in the stress test. So J.P. Morgan came out and said, hey, these guys don't know what they're talking about. Because we took the criteria that they said that they used, Jason, and our number says that we would lost way more money than, well, I don't know, way more. But, yes, we would have actually lost more money than what the Federal Reserve is saying, which kind of tells you, why did they do this then? Because math is math. Why would they underreport losses? Is it because, all 31 banks, Jason, may not have passed the stress test? You think maybe that's why this happened?
I think that's exactly it. I don't think any of these banks are solvent in any way. They just wait for the Fed to fix things or to print money or to move things around. I don't think any banks serve a function that's on the up and up, Joe. That's actually qualifies as can survive without help from the Fed. I just don't see it, Joe. It's a debt money system, and the debt is way out of control. So the masters of the debt are the Federal Reserve. Those who hold the debt, whether that be treasury holders like China or Japan or the Fed themselves. So are any of these banks really solvent? Are any of them really standing strong? How many times do we say, get your money out of the bank, get your money out of the bank? As an exchange, as a currency, yeah, you have some money in there, you pay your electric bill, right? You pay your rent. But Joe, I don't see any more of a function of the banks for the average citizen than moving currency and paying bills. So I think the rest of it is insolvent. And you said earlier, the government tries to pay a bunch of money and to help everybody. Well, I see it more as they try to help those that got them elected. They're helping themselves. That's the whole point of the lower standard of living. If the government through the banks was really trying to help everybody, then our standard of living would be still at least where it was after World War II, and we are far from that, Joe.
Yeah, and this is very disconcerting when the head of our largest bank, it's funny how they release it. Well, at midnight, right before midnight, we're going to come out. And by the way, we did our own stress test, and the losses would have been higher the way we did the stress test versus what the central bank did the stress test. And it's this lack of confidence that is really starting to emanate from whether it's Janet Yellen, Ben Bernanke before her, now it's Jerome Powell. Alan Greenspan, he had a lot of respect. Before him, who's the guy? Paul Volcker. Right? These guys seemed like they had a lot of respect. Jason, we've lost that respect. Absolutely, completely have lost it. And now they're out there talking about, hey, I don't know what the central bank is saying, but we did our own test. We're going to lose more money than what they said. By the way, J.P. Morgan, they're talking about losses of over $100 billion. I mean, and somehow they're going to stay solvent and lose $100 billion. That math just doesn't work for me. I don't know about anybody else.
Well, too big to fail, I guess. If you can qualify, then you'll get bailed out, right? And how many times have you talked about it? The bail-in to come, right? So I guess maybe the banks are jockeying for position, because if there gets to be a point where there needs to be a bail-in, you want to be one of them, right? You don't want to be one of the banks that are left out in the cold, right?
How about this? Here's another thing you don't know, because I'm scaring you. I don't know if I am. I don't want to. Trying to educate. Do you know the losses at the Federal Reserve right now? Do you happen to know how much money they've lost? Because they can just make it up, right? As it sits of right now, June 19th. So about 8 days. So the number is actually higher right now, but $176 billion of losses are sitting on our Federal Reserve's balance sheet. Just so you know. Right? As there's this quantitative tightening. That's how much the losses are. So they've lost more money than the FDIC's got in their bank account. Yeah, what could possibly go wrong? And guess what? They're going to lose money next week and the week after, next month, the month after, next year, the year after. Are you starting to figure it out yet? We were talking at the half empty cup yesterday. What a great show we had yesterday, right? You can lead the horse to the water, right? But you can't make it drink. I'm trying to lead you to the water. Trying to get you to understand what is actually coming. They know. Believe me, they know. They already know. Why do you think this central bank digital currency thing has been racing to completion? Because they already know what they're going to do next. They only have 31 banks left. It's all over. Kind of looks like it, doesn't it? When we get back, what the heck is going on in house? 800-951-0592. Patriot Radio News Hour, Joe and Jason on this Thursday. We got the news that we expected today. Matter of fact, it got worse because Walgreens just blowing me away. A little less, H&M, Levi Strauss, Micron, okay. But Walgreens, it was bad. I mean, big drop in the guide, and we're seeing this play out over and over and over and over and over and over and over again. Right? It's the S&P 500. It's 5 stocks versus 495. Right? That's kind of what we're looking at here. And now we've got the Japanese yen blowing up, France blowing up, Italy blowing up, Bank of America, the U.S. Treasury market, one shock away from not operating properly. A stress test that J.P. Morgan said, I don't know how they're doing math. Right? I don't mean to laugh, but obviously the stress test isn't that stressful, and they don't know how to do math at the Fed. According to hey, that's not me. Jamie Dimon said they don't know how to do math. I don't know. Do they? I don't know. Maybe. Probably not. Living wills? What's the big deal? What could go wrong? We can't close them down. Don't worry. Right? Money market? Bam. Just doesn't stop, does it? We're going to block you. We're going to make you pay fees. We're going to, you want to sell? Yeah, well, we're going to take 20% of your money if you want to sell. Again, they can make up any number they want. It's true. And now, I don't know where this is going. Yesterday's housing new home sale number was kind of, whoa. Because that was like the one bright spot. Because the new homes, everybody knows, hey, we can give you a fake rate, right? You use our in-house lender, and we can give you, a 5% rate or something like that. Nobody's buying. Pending home sales. I don't know how this can be true. I don't make these numbers up. Just dropped off of a cliff. They're now down almost 7% from last year, which was terrible. Think about this. It now hit the low. Remember COVID? Like, was it March or April when they shut down the country? That's where it's at. That's where it went to. I'm not kidding you. The market is at an interesting point, according to Lawrence Yun. He's the National Association of Realtor head, right? The guy doesn't know what the hell he's talking about. But rising inventory and lower demand. Remember what we said about new home inventory, right? That thing's off the charts. There hasn't been this many new homes since, guess when? Oh, wait, 2008. Well, what was happening? Oh, that's right. It was a housing crash, right? And now they're saying selling prices, which hit a record in May, inventories are up almost 20%. Sales are down 7%. Let's wait and see what happens in home prices. And Jason, this is a wild card we did not anticipate. Right? Is it going to be possible now that home prices are going to start collapsing? That I don't know. I'm not saying that they are or they're not.
There's a lot of conjecture both ways on that one, Joe. I've seen so many guys saying the housing crash is coming, and they've been saying it for a couple of years, so it hasn't happened. But now, and you and I have talked about, this is just my prediction. I just still see housing prices just climbing slightly and just kind of staying kind of stagnant. If you're the homeowner that's just the average guy and your house price goes up by, 3%, even if the economy's looking bad, you're thinking, well, at least my house went up a little bit. Everything's good. But if you have inflation, that's 15%. Did your house price really go up? I still believe, Joe, that with the inflation that we have, and it's not being reported, I think, in the way it's responsible, you could have the prices of things going up and you feel like you're doing okay. And if you have to pay twice as much for food and energy and everything else, that's a housing crash. So, Joe, yeah, maybe what would be the situation if housing prices just went down 10%? The prognosticators are like, okay, it's, what do they call it in the Big Short, a gully? You're going to the real estate agent. Oh, we're in a little gully. We're in a gully, right? I have no doubt that the housing markets are in a really, really, really bad situation, Joe. It's just not the same as 2008. And if housing prices go down 5-10% all over the nation, that's a major housing crash, and because the inflation makes it even that much worse, Joe. So it won't look the same, but it's possible, Joe. It's definitely possible. I mean, when money gets tight, people start dumping all their assets, and a lot of people will dump their homes if they need to make their life a little more comfortable.
It's too early to tell, but this is another. It's not a good sign. It's just simply not a good sign. And this whole, this bubble mania, this is all part of what we've been talking about. And you start putting all these dots together. Jobless claims right now, it's elevated. But we're not, where I'm like, okay, I'm getting a little worried here. We had, we're up about 20 to 30,000 first-time jobless claims more this month than we were last month, right? Last month we were about 210. Now we're at about 240. If this thing goes to 260, 270, we could have a big problem. There's no doubt about all of this. And when you hear things like Walgreens down 20% in a day and saying the consumer literally disappeared, right? I mean, that's what Walgreens was kind of saying. Like, hey, things were okay in April. May was like, okay. And then we don't know what happened. We don't know what happened. Remember how you go bankrupt. Gradual. We've been gradually ticking down for 18 months or so? I'm waiting for the suddenly, right? Get more diversified today before the suddenly comes. We'll be back 800-951-0592. Patriot Radio News Hour here on this Thursday. Tell you what, I'm going to pretend for one item that the big move in gold today hasn't happened. $20 gold pieces, $2,495. So that's $30 off. Gold's up 30. Take advantage of it. I mean it. Listen, it's so easy to see here. Why do you think every single bank, Wells Fargo, Citigroup, JP Morgan, Bank of America, $2,700 gold average price this year? Average price. Gold hasn't even, it's what, was above 2,400 for like a couple of days so far this year. Right? Average price, 3,000 next year. What are you doing? They're telling you. I want to get to Walgreens. I want to tell you how bad it is. Because it's bad. The CEO was out on the conference call. He said, we assumed that the second half that the consumer would get someone stronger. That is not the case now. The consumer is absolutely stunned by the absolute prices of things. This is the CEO of Walgreens. And the fact that some of them may not be inflating, some of the prices may not be inflating, doesn't actually change the resistance to current pricing. We have to get really keen, particularly in discretionary things. What does that mean? Well, simple. We got to lower prices and lose money. That's what it means. But it gets worse. I thought that was bad enough, but it got worse. Walgreens got 6,800 stores. 75% of our stores drive 100% of our profitability today. What that means is the others we will have to take a hard look at. We are going to finalize a number because we're going to close stores. Now, if they close 25% of their stores, because 25% of their stores are losing money, that'd be 1,700 store closures. I don't think Walgreens will close that many. But Jason, the situation is obvious here. Right? The consumer is absolutely stunned at the pricing of things. Go to allamericangold.com today. The very first article is the idiot lunch lady Janet Yellen, that clueless SOB. You know what? Go back. You should hear my shows 07 and 08 now, how I was hammering her. She's talking about, I don't get it. I shop every week. It's not that bad, Jason. I don't understand. I go to the store every week. It's not bad. The CEO of Walgreens is going, what are you talking about? The consumers are stunned. Now we're going to have to shut stores. Jason, this is, again, this gradual stuff, it's come to an end.
Yeah, we're going to see some things happen. The next few months are going to be pretty interesting, aren't they, Joe? What you're mentioning here about the consumers suddenly stopping. Is there even a higher level of consumer stopping, right, Joe? In other areas of the economy, are we going to start seeing a huge thud all over the place in the next few months? And we know what this usually leads to, Joe. This leads to some sort of false flag emergency so that when things really, really, really go bad, they can point because right now you got to point the finger at the inflation, at the government, at the Fed for the printing. But where else can you point it right now? Even the Ukraine war and the war in Israel. it's just like it's kindling. It's simmering, but it's not
right now.
inflamed.
I love how you're talking. I think this guarantees Israel's going into Lebanon. Now the Biden administration is saying, I think we're going to allow for private security forces, U.S. private security forces, to go into Ukraine. Today, North Korea says they're sending engineers to help Russia rebuild bombed out cities. I mean, this whole thing is coming. We also had durable goods today. Core capital good orders. That's what they use for GDP. Non-defense ex-aircraft down 0.6% month on month. By the way, they are hoping for a 0.1% rise. By the way, that matches, this is the second time this year, and this is a May number, so there's only been 5 of these, matches the biggest drop of the year. Capital goods shipments, non-defense ex-aircraft, down 0.5%. And Jason, GDP was only 1.4% in the first quarter. Not looking very good here in the second quarter. And again, a lot of people are saying, hey, the Fed should be cutting rates already. Mohammed Eller, they should cut in January. They're not cutting in January. I'm just telling you that. They're not cutting in January. But it certainly looks like we're not there yet. But this was a much bigger gradual step than we've had all year, and all of these numbers that were out today. And Jason, I'm going to tell you, this debate tonight, you may think it matters. It doesn't. Get protected. Do it as soon as you can. $20 Liberties, $2,495, $2,495. 800-951-0592. Final segment coming up. $800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Thursday. We have dimes and quarters still on sale. I'll tell you right now, this is, I don't know for how much longer. We're down to like less than a half a bag of each, a half a bag of dimes, half a bag of quarters. So if you want to take advantage, $2.25 a roll on quarters, buy 10 rolls or more, $2.20. On the dimes, $112.50, 20 rolls or more, $110. But the buy of the day, $20 Liberties. Save $30. Pretend like today didn't happen. $24.95, $2,495. Gold's up $29 right now. But Jason, tomorrow we get the PCE number. I'm expecting it to be down 1/10, maybe 2/10, maybe. I don't know. Anything could happen. But I believe that's what we're going to get. And I believe that if we get that, we're going to have higher gold and silver prices tomorrow. I mean, that's just what I think. And then all bets are off because you got the French election on Sunday, which as of right now, it seems inevitable that the group that they say they want is not going to win. They're going to be last. They're going to be third. It's going to be the far right or the far left, and half a dozen of one, half a dozen of another. There's talk that this could be like an English thing, where whoever gets elected and wins may not survive 90 days, and the whole thing blows up. Remember that lady that was the prime minister there in England, and it lasted, I don't know, 6 weeks or something, and then they blew her out of the water. We could have one of those. By the way, the Japanese yen, it was lower, not lower. This is a big problem here as well. I think we're going to see if the Japanese yen does not recover tomorrow with the inflation number, expect major interventions from the Bank of Japan next week. And by the way, looks like there's going to be a huge revision downwards in Japan's GDP, which will take away their ability to raise rates, because they need to raise rates to save the yen. Instead, Jason, it's going to be a lot more treasury selling. I think, if they spent $60 billion the last time, what are they going to have to spend this time? $120 billion, $200 billion? How much money do they have really left to even fight it?
Yeah, that's a good question, right? How much? It's a question I can't really answer very well myself, Joe. I mean, it's the next few months are going to be hard to put into words. In the next 12 months, especially, we're going to see some stuff. One of the reasons I bought into Patriot and to run the Colorado office with Joe was because in 2018, when he came on the air, I was already selling gold and silver, but I was small time. It was just me doing something to add to my income. But Joe offered this opportunity, as far as I saw, that when this emergency came, this otherworldly, crazy thing that was going to happen, gold and silver prices were going to boost, and there was going to be a lot of scared people. And, Joe, I always said the next 9/11 was coming, and sure enough, right? Here came COVID just a year and a half later, and we're looking at that right now. We're looking at the next one, Joe. It's these next couple of months into the next year.
That's all that COVID.
This is a great time to buy gold.
A couple of years, right? Great time. Yep. Just bought you a few years. 800-951-0592. Jason and I, we're coming right back with the half-empty cup.